Good morning, everybody. Welcome to the Locke in Your Success Options Trading for Income Weekly Update for September 20th, I believe it is, 2014. Before we get going, we'd like to remind you that the presentation is for educational purposes only. We're not broker-dealers or financial advisors, and we're not making any specific trade recommendations. Also, please be aware that the risk of loss in trading options can be substantial, so please be aware of all your risk prior to placing any trades, and be aware that any trades and or results covered in the presentation are hypothetical trades, although they are as accurately represented as possible. If you're watching this on YouTube or some other venue, come on over, check out our programs. The M3, Bearish Butterfly, ROCK M21, we got group coaching, we have one-on-one coaching, we have a trading triangle program, so lots of good stuff there. And join our mailing list, get your free report, 7 Secrets to Becoming a Successful Trader, and sign up for this free weekly webinar. And I said September 20th, and I believe it's actually October, so I'm not that far out of it. So just an error on my part. Thank you, Curtis. Okay, so we don't have a whole lot to talk about as far as positions, but let's just kind of quickly take a look at the markets here. I'm still thinking that, last week all that really happened is if we look at the SPX, we came down into a support level here, and we had a bounce back up to a previous support level, which is now acting as resistance, so completely normal market movement there. If we look at the NASDAQ, we had the same thing. We come down to this primary support level, bounced off of that, and we're up at this resistance level here, which we can kind of draw in if we'd like. Again, movement that pretty much makes sense there. On the Dow, same thing. We come down to this more primary support level that we've been watching. And with this one here, though, we did break, arguably, we broke back above our resistance level. I wouldn't call this a clear break, but that is an indication that we may go higher. And on the Russell, we really didn't tag any significant support level. We don't have a whole lot of significant support levels left, right? So we've broken this range. We've been in it for more than a year. We actually have to go back 2 years to get any reasonable support level. And realistically, the next one, I'm thinking, is down closer to this 1,000 range. With lack of any real near-term support levels, I do like to use Fibonacci's and price targets. So our next hard support level from a price target standpoint is down in the 950 area. We do have Fibonacci support levels here at about 1030 and around 1,000. So we'll have to watch those levels on the way down. We have this area here, which is the essentially the center of our very long-term channel that we were talking about last week. Right, we have our long-term channel. This is the center of that channel where things tend to pivot. That's where we more or less pivoted off of last week. So market movement's making sense. The only thing that doesn't really make sense to me at this point is the Dow's a little stronger than it should be. As of this point, we are still shorter term bearish. So I'm thinking that eventually we roll back over and come back down lower, at least to the 1030 level, maybe to the 1,000. And from there, we'll have to see how things go. Now, what's going to change our mind on that? Changes our mind if the market, if we start seeing these newer resistance levels break, then I'm going to change my mind and think the market's going higher. But for now, I'm still shorter-term bearish. And of course, as the market comes down, it gets more volatile. You get these big bounces. And we've had a pretty significant bounce from 1040 to 1080. What are we? 1082. We went all the way as high as 1100. 60-point bounce and within the week, so that's a pretty big move, and that's not uncommon for these when markets turn more bearish. You get some significant down moves, you get this hard reversal, and then they continue back down again. That's what I'm thinking is going to happen going forward. So that's what I'm thinking on the markets, more or less continued bearishness, and let's take a look at some questions here. All right, what charting software am I using? This is Profit Charts in Thinkorswim. So this is just a regular Thinkorswim Profits Charts package. They have another charts package as well, but that's all I'm using here. What does the market tell me when I was able to get my fly price of 905, only 36 days to expiration? Right, right. So it's just a high volatility environment. So essentially, there's a lot of fear in the market. Nobody knows where the market's going. You get a very flat delta in your butterflies, and they come really cheap. So to me, that's an opportunity, because when I can get into a butterfly at 36 days to expiration, I know what the value at $9. I know what the value has to be at expiration. So that gives me a lot of profit potential to work with. So I really like this environment. So it's just your concerns are just going to be knowing that you're in a volatile, choppy market. In a volatile, choppy market, I tend to be slow to adjust and let the market come back at me. So just good point to enter December bearish butterfly. Yeah, I mean, like I said, the market being more sideways to downtrending anytime really off of any bounce is a decent time to enter some sort of a December bearish butterfly, particularly if we're up today. So not a bad thing there. Do I know if a UK citizen can get a Thinkorswim account? I do not know. The best thing to do is to contact them directly. So thinkorswim.com. And they're the best ones to tell you who can get what. All right, so that's all we have for questions to this point. So as far as the positions go, we're already out of the October stuff. I think I went over the results for that last week, so there's no real need to go through that again. I can show you what we got going on. The first thing we have here, which is the one that's in trouble, is our November V Condor. Now, if you know, remember me talking in the past, V Condors do not like, any condor for that matter really doesn't like these really volatile conditions. So we are drawing down some money. Good chance we're probably going to take a small loss in the October V Condor. We'll see. It may work out. The good thing about doing a condor in the V Condor style versus a lot of the other styles that are out there, where you're rolling back spreads and you're doubling your size, which is actually not a very smart way to do a condor, but a lot of people do it that way. The good part about this is if you're trading it responsibly, you should not take more than what you would make in a general month. So in other words, I could close this right now at a $3,100 loss, take my lumps and move on. Over time, the strategy works fine. It'll do fine. So that would be good. If you take a look at our analyzed graph, there's really not a lot of risk here. I mean, the market comes down and completely crashes. It's not a big deal. It comes up into here. With a volatility lift, you'll actually be near zero likely. You could take the straddle out. You might make a small amount of profits. Like I said, it's a good chance going to be a small loss here. See, the challenge is, though, that a lot of traders, they can't handle that. They say, well, geez, I got to do something. And that's where they get into trouble. That's where they take their big losses. So just if you're in this type of trade, just be willing to take your lumps and move on. Now, can you do something with this? Yes. But when I'm looking at a V Condor, this is like a really beginner strategy. And as a beginner strategy, in other words, if you don't know what to do to fix this intuitively, then you're probably over your head trying to fix it. As a beginner, you're better off just to kind of sit and wait it out, stay in a relatively safe position. If it comes back, great. If it doesn't, take your normal loss and move on. Long term, you're going to make out much better that way. If you are a skilled trader and you know M3 techniques per se, right? What can you do with this? Well, you can essentially turn this trade into an M3, or it's kind of like a hybrid M3 between an M3 and like a ROCK program, right? So you roll these back to here. You sell 17 of these. You buy 15 of these. You get rid of your puts. You get rid of your extra put. You take this call and put it in the money. -1. And I'm just kind of throwing this together randomly here, so I don't know what the delta number is going to be like. But all right, so if you're a good M3 trader, you can do something along this line here, where now if the market continues to trend down, eventually this kind of goes away, but you're essentially managing this as an M3. You get your money back. If the market takes off in the other direction here, right, you just do your regular M3 techniques of rolling these out and then rolling the butterfly forward, and eventually you get your money back. So if you're skilled in M3 techniques, yeah, you can fix a V condor, but if you don't know what you're doing and you do this, you probably get yourself in trouble, and a lot of the other things. So just be aware of that stuff, that it is fixable, because really any position is fixable if you get out of the mentality of this is a condor and I have to stay in a condor, win or lose, and you just kind of manage your position. Anything is fixable. Sometimes I like a V condor entry. Even as an M3 trader, I might say, hey, I think the market's going to grind up, and we know a V condor strategy does well on a grinding up market. I might enter a market that way. And if the trade goes wrong and comes back against me, I can flip this into an M3 and just kind of keep on going. So that's a repair for a V condor. But for the purposes of this trade, we're not going to do that because, like I said, this is meant to be tracked as a complete beginner trade of a novice who doesn't understand that stuff, and you just understand that, hey, over time the trade will do fine. You're going to take your losses and your gains. But anyway, that's what I'm thinking there. So questions, can it be possible to review the webinar last Thursday? Yes, they're all on my website, www.lockeinyoursuccess.com, lock with an E, and just look at the blog. I have years and years of recordings there. We've been doing the same thing for a long time here, and like I said, you can see the strategies are very effective. Okay, so what is the best way to follow along the trades you review in these Monday morning meetings? Is just to show up Monday morning. I update them every Monday here in the webinar, and like I said, the sessions here are recorded. They're posted on the website blog. And I'm not doing email updates. I do not have the resources to do such things. And like I said, I don't provide updates on a daily basis. I do them on a weekly basis. Okay, so with a small M3 using IWM as a hedge, how do I analyze an option view? Yeah, all right, so we'll go over that after we do the trades. All right, so let's just move on to what else we have in November, and then we'll come back to some more questions. So here is, just because it's very, very quick, right? So here is our November V condor. Our November M3 has had no adjustments. This position is right here. We were able to withstand the down push here without any need to make any sort of an adjustment. We never hit any delta limits as far as our checkpoint towards the end of the day. And of course we got the market bounce, so this looks perfectly fine, and it's at about break even. That's all there really is to say about that one. We will continue to trade this as the market moves around, but right now it's giving us no reason to do anything. And the only other trade we currently have open is a November Bearish Butterfly, which again, it has a end of day adjustment point under 1050. We never actually hit that level. We had one checkpoint at, we're using the 3:30 p.m. Eastern checkpoint, and using that checkpoint we never closed or were under that 1050 level, although we did exceed that intraday. But if you know me, you realize that I don't trade off intraday numbers, right? So we kind of leave those alone, because this is the type of trade you want to just kind of look at the end of day, unless of course we're in expiration guidelines towards expiration, in which case we will do that. But 90% of the time we're not looking at the stuff intraday. Plus, if you look at our adjustment point, right, there's really not a whole lot of danger here. If we could let this come back to 1050, there's not a concern here. Realistically, if this goes back to 1040 intraday, there's not a concern here. If it goes back to 1030 intraday, there's not a concern here. If it goes back all the way to 1020, there's not a concern. So again, this isn't not a hard intraday adjustment point. This is basically saying, hey, looks like the market's starting to make closes under 1050. We're going to want to roll this back. So that's kind of the best way to do with that. And that is the last November trade. We are going to be looking at entering a ROCK trade on Wednesday. and we will enter it here, and we're going to be entering the December Bearish Butterfly in on Friday. So that's what's coming up for the update for next week. And oh yeah, one thing I did do is I entered the December, because we went through expiration, I did enter the December V Condor, so we'll quickly tell you what that looks like. And we did that on Friday, so let's take a look. Again, this is not a great environment for a V Condor, so I wouldn't necessarily go jumping into this thing. Let me, okay, so December V Condor, we put on at the 1190 short strikes on the top, 30-point wings. We had a straddle in here at 1080. We had 1080 on the put. And let's just move this up. Short strikes at 940, and we covered at 910. So here is what this position actually looks like from an analyzed graph standpoint. Because we have volatility's high, you'll notice you get a lot shorter distance from one side to the other, which is kind of normal, and it just kind of shows you how volatility shifts change things. But that's the entry, and we will see how this works out. All right, so let's go to some questions. T-log for November M3. Yeah, let me just quickly do that, which is very, very simple because really nothing happened. But oh no, I'm sorry. I guess something did happen. I guess we did do a rollback. All right, so we started in 926. Looks like we rolled back fairly early on 10-1. And it looks like we rolled back again on 10-10. See, this is why I do this. I don't remember half the stuff I do sometimes. I got so much going on, a lot of stuff I don't remember in some of this. But yeah, so it looks like we've rolled this thing back twice. So I'm just going to open this up so you can kind of see everything here. And that's what that T-log looks like there. All right, so let's see here. With a small position using IWM as a hedge, how do I analyze an option view? All right, so this is a great question, and I would love, I've put this out there many, many times, so hopefully some more people will see this. But essentially, all you're doing is you cannot analyze IWM and Russell at the same time on option view. So we're just going to come in here and say we wanted to put on an M3 and with just one lot, a $5,000 position. All we're going to do is we're going to pretend we're putting on a 10 lot. So for example, if I wanted to do an M3 here, and I wanted to do a 1060 M3 for, let's just say December, and I did a single butterfly in Russell, I just multiply it by 10, and I put the 20 in here, and just do analyze a regular position. 1, 2, 3, 4, 5, just like this, and this is just going to represent my one Russell butterfly. And then if I'm going to put an IWM call on this of right, this isn't going to be an actual setup. It's going to be an example. And if I wanted to put an IWM call on here of $96, I would just put the call in there like that. So this would essentially represent one Russell butterfly with one $96 IWM call. If I wanted to do convert trades, if I wanted to do verticals, and I wanted to do IWM verticals, if I did one Russell vertical, I would just do this. All right, if I did a Russell vertical. If I wanted to do something smaller and I did 5 IWM verticals, I just go +5, -5. I mean, essentially, you're using your option view software to track your Greeks, and you're just going to take your Greeks and divide it by 10, and that's what your real Greeks are going to be. For profit and loss numbers, the profit and loss I would track with your broker. It may be, because the profit and loss may be a little bit off, because you cannot take the market price of the Russell call and divide it by 10 and say that was the IWM cost. That isn't going to work. You can put your actual prices in for anything you do in the Russell. Anything that you do in the IWM, you can go in and actually punch in. I mean, you just kind of ignore what you paid and if your profit and loss is off, you just adjust this price to the point where your profit and loss is on, and it's going to track close enough with your profit and loss where it's not going to be a big deal. But like I said, track your profit and loss with your broker, and just track your Greeks here. But the Greeks are going to be, it'll work out fine. They work out fine. So that's all we do with when we're combining IWM. All right, let me just scan through our questions here so we can go from here. All right, so yeah, as far as December trades this week, your ROCK trade is going to be an M3 entry, almost, well, I know it's going to be an M3 entry. I don't even have to check because the volatility is too high. So essentially, you're just going to put an M3 trade on, and there's no concerns there. 30 days to expiration, M3 should work out fine. Depending on how choppy the market is, you might want to watch how far into expiration you go. If it's really, really choppy, then you may want to exit at a smaller profit target. But as far as the entry goes, it's just going to be a straight out November M3 trade for a ROCK entry. So as far as the only other entry we have planned, it would be a Bearish Butterfly entry. Bearish Butterfly in this environment, I don't have any trouble entering it. I mean, I would prefer to enter it on a bounce day, like Friday or any day the market's up would be. I would prefer to do that. But the reality is, Bearish Butterfly under high environment, 56 days to expiration, you have a very flat T+0 line. The only real loss scenario you have there is, I mean, you could always lose it, but the real risk you have there is the market deciding to go back up to around 1210. And would that even take that kind of a move? It probably would. Even if you entered this 1140, it would probably even take the move to 1210. And like I said, if you were trading this in 2013, you only have about 60 points up. The volatility is really high. If you can enter these for under $9, like in the $7 range, they can usually take a move, especially early in the trade, of a significant up move. So I'm just not that concerned with the trade at this point about timing it, especially in the more sideways markets. Now, that said, like I said, I would still rather look for an up day to enter it and look for a day when the prices tend to be down to enter the position, but not afraid of a bearish butterfly at all here in these market environments. If I was to start an M3 today, where would I put my short strikes for this November? Okay, so if you're doing a November M3 trade, yeah, so 30 points under. So if we are, what are we, Russell's at now? It's at 1082, so. Yeah, so 1050. If you're particularly bearish, you might want to run into the 1040s, but 1050 would, actually, if the market's down on open today, yeah, you may want to run all the way down to the 1040s. 1040s is actually a pretty good number. That's what I'm thinking there. What's the best way to roll an iron butterfly, contingent orders, or blast all and sink or swim? Oh, goodness. Yeah, that's a question that is going to take some time to discuss here. That's probably a little more involved than we want to get here. We do talk about that, but yeah, no, you definitely don't blast them all in sink or swim. You just need to do your regular thing. Really, the best way to roll an iron butterfly would be to do it through condor orders. So you just, in other words, if you had a single butterfly on here, if I had an iron butterfly, actually it doesn't matter if it's an iron or not. Let me just clear the trades. If you had a position on here, you wanted to roll it back. If you pretend this is an iron butterfly and you wanted to roll it back 20, you can just do this condor. Plus 10, right? You don't get a really substantial delta shift. You just kind of go from, let's see, just go from here to here, right? And then from there you just convert that, and then you do your other order here. This would be the easiest, this would be the way if you only had like one butterfly on. This would be the most delta flat way of rolling yourself back. You can fight for execution, and you can just go ahead and get this done. So boom, now you roll back. So that would be the most effective way to do that. You put your order in to take your delta risk off first to get this down, and then you just do your other side. That way, if the market reverses in the middle of your adjustment, it's not really a big deal, or if pricing goes bad or whatever. So you should be able to get really good prices doing that as far as an iron butterfly rollback. So that's probably the best way to do that. All right, can I show my T-log November 3? I already did that. The Options Tribe webinars, okay, don't seem to work. Yeah, okay. So if the Options Tribe webinars are not working on my site, could you please tell me which ones are? What usually happens is SMB moves those links around as they change their website around, and they probably moved some of the links. So I'm going to have to just find out where they are and change the links there. So so please, yeah, just email me whatever links don't work, and I'll see if what I can do to fix that. Yes, yeah, November ROCK's going to be entered as a M3 more than likely. Have I entered a December M3 yet? No, I have not gotten into December at this point. I tend to wait when the market's a little more volatile. I do tend to wait until you know, with my live trading, I'll tend to wait a little bit close to expiration usually. Or I'll wait for an opportunity in the market. You know, if we're, I know Susan's an M21 trader, so or I'll wait for some sort of an opportunity where I see where I see some good pricing, or where I can predict the move a little bit. But I haven't entered a December M3 yet. I will, yeah, I'll enter the December M3 Friday. It's going to be 56 days to expiration, so yeah, we can do that. Do it full term, because we've been doing a 56-day cycle. We'll probably do that for another few months, and then we'll cut back to like some sort of a mid-month cycle where we enter it, I don't know, 50-something days, or I mean maybe 40 days or something like that, just to show you some variety here on that. But we'll do the December M3. We'll just do it 56 days. That sounds good. Which is going to be near Thanksgiving, so it might not be exactly 56 days. Sometimes you run into the Thanksgiving holiday putting the 56-day trades on. Oh no, we won't. We won't this, because we're not going to be. Sorry, that's going to. We run into the to Thanksgiving when we do our January trade, so we might not do that one 56 days. We'll do that one a little bit off. I meant January. I guess I'm having problems with months today. All right. So on the November M3, with the price bouncing all over the place, how long do you feel you can stay past your long strike to the upside before needing to roll closer to the money? On a November position with a volatility high, I don't care if I'm outside my 10th 3 days to expiration. Doesn't really matter. You're going to get that put value is going to hold pretty high. You know, if the market starts running more than 10 points past my long strike, or if I start having volatility issues where I can't control volatility anymore, then I'll do something. But I'm not worried about it. High volatility, the higher the volatility, the slower I tend to react. So, how long is it for of a delay? How long of a delay is it for me to place the webinar on blog for replay? That depends on my schedule. I usually get it done by tonight, Monday night. Sometimes it takes till Tuesday. If I can, I'll do it at some point before the end of the day, as far as midnight, which is the end of my day. So that's the timing for that. On my matrix, my volatility reads 15%. I don't really care what it reads. I don't pay any attention to the volatility numbers in the matrix. I just don't see them as relevant. So, yeah, maybe it's low, maybe it's high. I don't know, but I don't really care. All right, couldn't I add IWM and then look at the status it shows in portfolio delta? I don't know what that means, Mike. Couldn't I add the IWM and then look at the status it shows? Yeah, I don't know. If you have something in option view that will show that, a portfolio delta, I don't use that function if it even exists. I know OptionView does so many things that I mean, I use what I use. It shows a lot of stuff that's not relevant to you, but you know, maybe if you can have a portfolio delta, you can maybe just see that. I don't know that you can see that on the analyze graph. I've talked to the people; they don't know of any way to actually analyze these together. So we'll move on. All right, should I stick to IWM strikes similar to RUT or more IWM deltas? I expect delta might be the right one. Oh, okay, no, I do understand the question. So if you're, I think what he's asking, or Jens is asking, is that if I use an IWM to model this position, in other words, if this position here was actually a one Russell butterfly with one IWM call, should I try to simulate delta numbers? No. What I would do is if you had a 96 call, I would put 960 call in the Russell. So this is going to represent a $96 call in the IWM. It doesn't matter what the Russell shows you, what the delta shows you. Okay, is my long hedge in the M3 normally about 100 points in the money? No, it's whatever strike that I need to offset my delta in my butterflies. I like it to be around a 90 delta, which is going to be could be at any price point depending on your volatility level and how close you are to expiration. Okay, let's see. Am I doing any M21s? Yes, I do M21s all the time. I just do not monitor them publicly. And okay, and then quickly, please describe the new webinar on Options Tribe. So, yeah, this thing we're doing on Options Tribe, which I'm going to be doing in 25 minutes, so I have to get moving here. We're going over a live $600,000 position that I trade on SMD's trading desk. It's an M3 style trade, except it's what we call a super conservative M3 style trade, which essentially means that we're trading it very, very conservatively, and we're not allowing it to draw down as much as normal. And I do take market and volatility change opinions into consideration when I do trade it. So it's going to be traded not by a set of guidelines that you'll be able to follow, but you'll be able to exactly we'll go over what I'm thinking, why I'm making certain moves, and you can see whether they work out or not. And like I said, being a super conservative trade, the drawdowns aren't, from a percentage-wise, are relatively small. The profits from a percentage-wise tend to be relatively small, but we're dealing with some pretty big dollars. So that's pretty cool. All right, everybody, it's time for me to sign off. I got to get going. So thank you for joining me, and we'll talk to you next week. Thanks. Goodbye.